Good morning, everybody. This is the Live Market Open. I hope everybody's doing well. I'm Yohay, I'm a Forex Crunch and Market Movers podcast, doing the show as usual for FX Street. So I hope everybody had a great weekend. As usual, we'll be covering the recent developments in markets, of course, the non-farm payrolls on Friday, but we have a few other things, and we'll cover various charts and levels the next 24 hours, and of course your questions. So you're welcome to join us, and if you have questions and cannot see the chat box alongside the video, please go to tlk.io/fxstreet-forex-live-video. Okay, here I am also in the chat. Everybody, okay. So what did we have on Friday? What's going on in markets now? In general, the US dollar remains a winner. It emerged as a winner from the non-farm payrolls. We'll talk about the details of that later on. But in general, that's a continuation of the trend we've also seen from Tuesday last week. Okay, so good morning, Ed. On Tuesday last week, the dollar fell to new lows, and from there, it began a big comeback that was, of course, seen very strongly against the euro, with euro dollar reaching a high of 116.16 before turning all the way down. Let's jump to the NFP before talking about other stuff. So it's the king of Forex indicators. I must say it isn't as strong as it used to be. We had a little bit for everybody. We had 160,000 jobs gained, which was below expectations, and I must admit, for change, was in line with the ADP figures. So ADP showed private sector job gains of 156,000. Anyway, it was 40,000 below expectations. And we had it mimicked also in the official figure, which includes also public sector jobs. But nevertheless, that was a good hint that job gains would come out below expectations. Okay, so the dollar weakened initially on this figure, but this was just an opportunity to jump on the dollar bandwagon because of two things. First of all, wages came out more or less as expected, 0.3, but it's still a second strong rise. Okay, 0.3 is above the average of 0.2 we've seen too many times, and 2.5 year over year also looks good. Okay, so two things: wages came out better than expected, and there was a strong dollar trend all week, and it continued into Friday. So the dollar emerged as a winner. Elsewhere, on Friday we had Canada publishing its own jobs report. That came out a bit worse than expected. 2,000 jobs were lost in Canada, but at least the unemployment rate fell to 7.1. That's, of course, due to a fall in the participation rate. Anyway, it's not good news for Canada. The Canadian dollar was pressured anyway. Also setting the mood this morning, we had Chinese trade balance published yesterday. The trade figure, the bottom line figure, was a high surplus. So in theory, that's good news. But the actual news is that imports fell 10.9%, well below expectations, and also exports fell. Let's show you the, if I can get it. Yeah. Here we go. So you can see here, that's the FX Street calendar on Forex Crunch, of course. You can see the headline figure, both in yuan terms and dollar terms, is positive, but we expected a fall of imports of only 5%. It was more than double, 10.9, and exports were expected to remain stable, and they dropped. Okay, that's not good news for Australia, especially imports, because what China imports is what Australia exports. Well, making a very, very big generalization, but the Australian dollar at least needs more trade between Australia and China, and the trade that will go in the direction, of course, of imports to China of Australian exports. Okay, so that was the bad news over the weekend, but let's see soon the impact on the Australian dollar. More stuff that we had over the weekend, that we had quite a lot. Okay, talked about the non-farm payrolls, we talked about Chinese trade balance, and I mentioned this several times, but now the time has come. Greece is back in the news. Some of you are fascinated by the Greek drama. Some of you are so tired of all this can kicking down the road exercise. Anyway, we have the negotiations being dragged on and on and on and on, okay, between Greece, the debt-stricken country in the Eurozone, and its creditors about the next tranche of aid. We know that the creditors are at loggerheads with each other. So the IMF wants harsher austerity, but at least some kind of debt relief. The European Commission, that means Germany, wants less austerity, but also absolutely no debt relief. And Greece's position is that it's trying to show everybody that it's doing its part. Okay, so we had 2 days of negotiation, 2 days of parliamentary discussion in Athens. Outside there were huge protests once again. Inside there was a fierce debate once again. Eventually, the parliament, with narrow majority, approved more cuts. Remember, this is a left-wing government, considered last year a radical left government. So they announced more cuts to the government budget, especially pension, where it hurts most. And other parties, which are mostly to the right of this government, they voted against it. Anyway, they want to come to the Eurogroup discussions today in Brussels with sort of clean hands, that they did their part to embarrass the creditors. I believe what I expect is that these negotiations will be dragged on and on and on. Europe doesn't want things to get out of control before the Brexit referendum. Everything is related, of course. European Commission, Germany, France, they don't want to show that Europe is a mess, which it is. They want to show that it's a positive thing to keep most Britain's British citizens on the Remain camp. So we have today Eurogroup negotiations. I hope there is some kind of resolution for Greece, but I believe that the situation will be dragging it on and on, with headlines taking over more and more in coming weeks. Okay. Elsewhere, well, I must say, so far there isn't a direct impact on the euro, but I believe we will see it eventually. Oil prices, they are on the move. The fires in Canada are already responsible for a drop of about 1 million barrels per day in oil output. Okay, so that's positive for oil prices. Other oil-related news is that Saudi Arabia dismissed or shuffled its some positions. They replaced the long-standing oil minister with a new one, and also the central bank governor. Now, Saudi Arabia has a peg between its real and the US dollar, and with lower oil prices, many fear that, or suspect or speculate that they might remove this peg. This could cause all kinds of disruptions. At the moment, we're seeing more of an impact from the Canadian story about the fires impacting oil prices more than anything coming out from Saudi Arabia. Okay, so that was a big roundup of Monday morning news. Now let's finally move on to the charts. Euro dollar. One last figure, a small one, but worth mentioning. We had today the German factory orders released, and they came out better than expected, rising more than expected, also with the small positive revision for last month. This had perhaps a short-term, short-lived impact on the euro. This is the 30-minute chart, so we did see euro dollar moving positively on the German figures just a bit, just a few pips. Now it's sliding once again. We're seeing euro dollar hugging 114. 114.10 used to be a strong level. I still see 113.35 as some kind of support. Resistance is at 114.65. We did see some action on Friday, of course, but this was, as I mentioned beforehand, short-lived. Okay, so with the non-farm payrolls, we had euro dollar rise all the way to 114.77. But as we often have with NFP reports, technical levels are broken only to be restored later on. Anyway, 113.35 to 114.60 is the range I am looking at. Pound dollar, today we have, I think very soon, or maybe it already began, a speech by David Cameron, the Prime Minister of Great Britain. He's expected to speak about about, of course, the Brexit, something, and to tie Europe's, the vote to the legacy of Winston Churchill. I don't know if that will work out really well, because also Boris Johnson, who is running against, of course, Cameron, in the campaign for Brexit, wrote actually a biography about Winston Churchill. So I don't know who will win with claiming his legacy. Let's see if I can get some information about that speech. At the moment, I cannot see anything related. No, but let's see. He's supposed to speak right now. Yeah, he could. He is expected to say that if Britain opts to leave, that would risk peace in Europe. Okay, so the fear-mongering campaign is going up another level. I think there are reasons for the UK to stay in the Eurozone, but I think the campaign also is a bit far out. Anyway, no headlines, only headlines about what's expected in the speech, nothing at the moment that I can find related to that. But if anybody has news regarding David Cameron, that's of course welcome. Anyway, the pound is under pressure this morning. I would say at the moment still more dollar strength than anything else. 143.89 is the current level, under 144.40, which is support. Used to be support, sorry, now it is resistance, of course. 143.50 is the next level of support. You can see this big climb down of the pound. The pound dollar cable made a long way up, mostly riding on US dollar strength, and markets basically ignoring the fear of Brexit. Okay, but when the US dollar is stronger and Brexit fears also are here with us, then we're seeing this trend turn down. The pair trend down once again. Pound yen here, dollar yen. Here we're seeing an interesting phenomenon. We're seeing dollar yen at resistance. We mentioned the 107.65 level, and for a good reason, because that was support before we fell to lower ground. So during the month of April, twice at least we challenged this line. Third time and was a bit above, and then we had a big breakdown under this line to 105.52. That was low until we bounced back up, and now we're challenging the line once again. So dollar yen is up on the day. Again, some US dollar strength, and nothing Japanese related. We did hear from them that they might intervene if moves become extreme, but we've heard that rhetoric from the Japanese so many times. I would not call that news. On the other hand, I would expect the yen to strengthen on safe haven flows because of what I mentioned earlier. On China, we're not seeing that. We're just seeing a stronger dollar across the board. So since last Tuesday, the US dollar remains strong, and that is not changing. Also this morning, especially against the yen. Dollar CAD, here we are moving to higher ground, challenging this 129.30 level, which worked as support right here and resistance beforehand. The pair is chopping through this level at the moment. The next line of resistance is very, very clear. That's already the 130 level. Okay. On the downside, we have 128.30. Oil prices are going up. In theory, that's supporting the Canadian dollar, but the reason for rising oil prices also originates in Canada. Those fires limit production of oil because it's in the area of the tar sands in Alberta. So if Canada cannot enjoy those higher oil prices, what's it good for? Anyway, we also had the not so good jobs report in Canada. So all these things are weighing on the Canadian dollar and the strong dollar. Good morning, Ka. Good morning, Ed. Good morning, Jax. Let's continue. The Australian dollar under pressure, clearly because of China. And of course, last week we had the RBA. So to remind everybody, last week we had the Reserve Bank of Australia cut interest rates. It wasn't fully priced in by the market, so it was sort of 50-50, and we dropped to 1.75% in the interest rate. In addition, the Reserve Bank of Australia decided to, they cut their forecast moving forward, hinting, well, for many analysts in Australia, that means that they'll cut rates again early in June. So that weighs on the Australian dollar. A new week, also with weak Chinese trade figures, the Australian dollar is moving lower. So 73, 75, previous line of resistance, we had a battle over there. The next line of support is 72.80, okay? And then 72.20. If we do move higher, 74.40 is the next level of resistance. Kiwi dollar sort of getting carried away against the US dollar, against, Kiwi dollar is being pulled down by the Australian dollar, suffering against the US dollar, still struggling with the 68.20 level, which separated ranges quite nicely, okay? So we've seen it work right here as resistance. That was in early March. And yeah, and later on it worked as support. Not a perfect separator of ranges. Also, the Kiwi has become a bit more choppy, but Kiwi dollar still enjoys relatively positive technical behavior. Look at this very, very nice double top at 70.50. Anyway, currently battling support at 68.20. Further support only at 67, perhaps 67.50. But the battle is still raging. The RBNZ also has its financial stability report this week, and they could use it as an opportunity to hint about a rate cut coming in their next meeting, but nothing is certain. The interest rate in New Zealand is 2.25, and in Australia it's 1.75. It's quite common to see a higher interest rate in New Zealand, but we might. The markets seem to think that the Reserve Bank of New Zealand will be next, okay? And maybe later the Bank of Canada, but who knows? Let's go to other currency pairs. The Swiss franc, dollar Swiss. Well, now we're seeing the Swiss franc strengthen a bit against the US dollar. So that's an interesting move. It sort of seems to be moving on its own because euro dollar is relatively stable. Anyway, the moves are not huge. We're just under 97. 98 remains high resistance. 96.40 is support. Remember, there's lots of intervention by the Swiss National Bank. We learned also that Oanda reported its figures and it lost money on the Forex broker Oanda, one of the more respected brokers. They suffered because of the what happened last year with the Swiss National Bank. The decision of the SNB to remove the peg hit quite a few brokers, brought Opera UK to bankruptcy, hit hard FXCM, hit hard other brokers. Now we know also about Oanda. So that event on January 15th, 2015, that's already 1 year and 4 months ago, still has an impact on Forex brokers. And the SNB continues intervening in markets. Surprisingly, we're seeing euro dollar and euro Swiss now fall from the highs. That means maybe the guys in Zurich are a bit asleep this morning, allowing the franc to strengthen, but from low ground. I mean, when we're talking about euro Swiss, we had quite a rise in euro Swiss. That means it's weaker Swiss franc, and now things are looking better for the franc. Euro pound, more interesting currency pair. The euro and the pound, 79.30 is the current level. Just under 79.30, I should say. 79.30 has been a nice separator of ranges. First attempt was here in late February. Then it worked as support. Again, not a perfect line, but certainly a pivotal one in the range. 80.20 is resistance, followed by 80.30 or 80.25, followed by 80.20. Supported at 78.30 and stronger support at the veteran line of 77.40. Jack says, hearing brokers lost money breaks my heart. Yeah, perhaps we'll dedicate a moment of silence. Just kidding. Yeah, I mean, there are some quite a few honest Forex brokers out there, and some aren't. I will not comment further on that, but you know, being a Forex brokerage is like every other business. You have to manage your risk in accordance, and if you lose money, that's part of the game. Like Forex traders, also Forex brokers can lose money, and yeah. All right, Euro Yen 122.53 at the moment, under resistance at 123. We're seeing here very nice support at 121.80. Okay, so this line works really well for this cross. Moving up this morning, mostly on the weakness of the Japanese yen. Okay. Weakness of the Japanese yen is, well, felt a bit less here because also the pound is feeling the heat. 154.57 is the level at the moment. 154 is support. 155.80 resistance, followed by 156.60. Okay, the dragon is a fascinating pair. It allows lots of opportunities to well, to make a lot of pips and to lose a lot of pips. Currently, it used to move sort of on the safe haven flows. That means when there was an optimistic mood in markets, the pound advanced with commodity currencies, and the yen saw no demand. And in bad times, the yen is sought after as the safe haven currency, and the pound is a risk currency, especially with the Brexit. We're recently seeing more of a dollar against the rest mentality, with, of course, some currencies showing weakness and some strength, but the general trend is either dollar up again across the board or dollar down across the board. In that context, I also mentioned we had some comments over the weekend from Bill Gross, who was the chief at PIMCO, and others saying that the Fed still has a chance of raising rates in June. I see a small chance of that happening. If you listen to our latest podcast that Market Movers just published, it's podcast number 100. We discussed that in detail, why the Fed will probably not raise rates despite higher wages, despite people like Gross and some people actually on the Fed saying they should raise rates. Okay, anyway, that's happening in a month from now, a month and a few days. Anyway, yeah, so, but the dollar is still perhaps the cleanest shirt in the dirty pile. Okay, and let's look at oil. Oil is higher on the day, 73 cents, according to what we're seeing in this chart. 45.31, higher in the range. We've seen it drop to 43.25. That's sort of support. We're talking, of course, about WTI crude oil. Let's see if it can continue higher. But remember, if it moves higher because of less production in Canada, that's not good for Canada. That's not good for the Canadian dollar, okay? It's good for oil companies elsewhere, good for other countries producing oil, but not for the Canadian dollar. The correlation this time is not that positive because the damage comes from Alberta. Let's see if I can get some latest news about that, but the latest thing I've read is that, yeah, fires are raging on in Canada. Oh, Canada getting a handle on Alberta wildfire. No restart yet for oil operations. That's news from Reuters from 1 hour ago. Okay. I see here CNBC quoting Reuters. Okay, so this is the article I'm looking at. Anyway, this fire seems quite dramatic. Anyway, the headline is from 1 hour ago. So things are improving. That's the good news, well, for Canada. But for oil, it'll still take time for them to restart operations. Okay, so yeah, 88,000 inhabitants of Fort McMurray still in trouble over there. Okay, let's take another look at euro dollar, again hugging 114. All right, any questions? We'll talk about more events we have today, and of course Yeah, okay, so yeah, let's take a look at events for today. Looking forward to your questions. Unfortunately, this function of the CME Group FedWatch, the implied probabilities for rate hike in the United States is not working at the moment, okay? It's not 0% chance, it's just a technical issue. Did I miss the NFP talk? Yeah, but maybe I can repeat it just in short before we move on to new events. So for Jackson, for everybody else that joins us right now, on Friday we had the jobs report. Initially, the markets moved on the headline. It was 160,000 jobs gained, below expectations, and I must say that in line with the ADP private sector report. Okay, the BLS report on Friday is for the non-farm payrolls in general, including public and private sector. But the miss of about 40,000 jobs seen in ADP was also reflected in the NFP. So that's an interesting thing to remember for next time. The initial reaction was a weaker dollar on the headline figure, but then markets began digesting the wage figures, and also remember that the trend is with the US dollar. Remains so since the big turnaround Tuesday last week. So with 2.5% year over year, things looked better for the US dollar, which came out as a winner. Okay, question here. Could we cover pound Aussie? Yeah, sure. Let's take a look at that. On the Aussie, it used to be both currencies are risk currencies, but of course, the Australian dollar is a commodity currency because they export lots of metals, and the pound, major pair, not too many commodities over there. Anyway, the trend here, as we can see, is quite clear to the upside. The pound enjoyed a lot of backwind until the recent fall, but it fell mostly against the US dollar. Okay, less fears about a Brexit, ignoring weaker data. Australian dollar had also a nice run for quite some time, but things turned sour. Last week was a terrible, terrible week for the Australian dollar. The RBA decided to cut rates to 175. It was not fully priced in, and then they lowered their forecasts. Chinese trade data coming out over the weekend was worse than expected, a drop of around 10% in imports. Where do some of these imports come from? Australia. So lines I'm watching here at the moment, well, it's a bit messy as well, but the round 2 level is, of course, of high importance. To the downside, we have 190.50. Perhaps if we add more lines, we can add right here 197.20, which was the peak, the most recent peak, and the most recent low before the collapse right here at 199. These are the levels I'm watching. Regarding a short, fundamentals don't tell me necessarily it's a short because data from China has been weak. Australian, the RBA perhaps will cut rates once again. There's lots of pressure on the Australian dollar. Is the pound worse off than the Australian dollar? I don't have a clear answer for that. I'm also a bit bearish on the pound because of those Brexit fears, because of everything that's going on in Europe, which Britain is not disconnected from. And so I think, yeah, I'm not sure when we had quite a ride here. Maybe you could see some profit taking. But in terms of fundamentals, I don't have a clear bias. I'm bearish on both currencies relatively equally. Anyway, 199 and 2 are levels to watch on the top side. Sorry, immediately above current levels, we have 197.20, and to the downside, 193, and then, of course, 190.50. Okay. Right, hope that answers the questions, fundamental and technical outlook on this currency pair. Perhaps we look at the even shorter term here. Then this seems like very strong resistance at 194.50. It worked as resistance. Now it serves as support. So if you go short, perhaps it's worth watching this line as well. Okay. So we talked about Yeah, let's talk about what we have today. Eurogroup meetings, always fun, always boring. No, Greece is back to the forefront, okay? The Greek parliament, as I mentioned at the beginning of the show, they passed new laws, new cuts in pensions, okay? They call it reform. Their creditors call it reform. It's not reform, it's just cuts. Cuts which the IMF itself described as counterproductive, at least trying to reach a primary surplus of 3.5%. Will just by raising taxes and cutting spending will just mean lower output, lower income from tax, eventually not higher, and an ongoing deterioration, less investment, etc. But anyway, Greece wants to show the world, the IMF, Germany, France, that they are doing their share of the deal, and they should get debt relief. Okay. If you remember the agreement from the summer, when Greece basically surrendered, the one thing that Prime Minister Alexis Tsipras managed to squeeze was a promise that after the first review of the new bailout program, the third bailout program, worth 86 billion euros, moving from pockets of the creditors in a circular action back to their pockets. And what he did manage to get out of them is that after the first review, talks about debt relief will begin. Of course, this was expected to be in October, November, but it has always been delayed. The goal of the creditors, especially Germany, is to keep the Greek issue under the table at least until after the Brexit referendum on June 23rd. But things are boiling. Greece wants to show everybody it's doing their share. They want debt relief. Also, the IMF agrees that there should be debt relief. But of course, Germany is a bit in trouble. On one hand, they want the IMF on board, okay, this international stamp of approval. On the other hand, they don't want debt relief for Greece because that would mean loss of money for German taxpayers, and they promised that would not happen. Let's see how this unfolds. My guess is that the normal exercise of kicking the can down the road will continue once again with another delay, more reviews, more cuts needed, more examinations. We have 6 weeks until the referendum, and big payments only for Greece only in July, so I expect more of the same. But remember, this story is now moved a bit to the forefront, and things could get messy right here. Anyway, today we have Eurogroup meetings in Brussels. The Eurogroup is the group of 19 finance ministers of the Eurozone. In an otherwise relatively light data day, we have the Centix confidence figure in Europe at 8:30 GMT. Canadian housing starts 12:15, could have a minor impact on the Canadian dollar. The Fed Labor Conditions Index, which, recently it has been ignored by markets at 2 GMT, and perhaps a bigger impact would come from the Chinese CPI late at night at 1:30. Just another figure. It could move, of course, the Australian dollar. All in all, today is a relatively light day in terms of indicators, but perhaps a more significant day in terms of political headlines. Reaction to China's data, David Cameron's speech on the Brexit, which I don't have nothing new on, but let's see if I can find something. And of course, we have the Eurogroup meetings in Brussels, if I'm not mistaken. Okay. Yeah. Anyway, so we have a few more minutes till we reach the wrap for today. And let's talk about other events we have this week, because things are going to get busier after today. Still no deal for Greece, the Eurogroup, Chinese trade balance. Tomorrow we have the US job openings, the complementary jobs figure. It's only for the month of March, so it's a bit late, but still of importance for the Fed if you suspect that they will raise rates in June. This could give another indicator, so it's worth mentioning. On Wednesday, we have the crude oil inventories. Let's see if we have some interesting things there. On Thursday, it's the UK rate decision plus the inflation report, okay? So it's dubbed as Super Thursday for the pound, the QIR, the quarterly inflation report. Of course, they do not want to Brexit. And on Friday, everything becomes a bit more crammed, a bit busier. German GDP figures in the morning, and then a focus on the US consumer with retail sales and consumer sentiment. Jax asks, what are the best carry trades now? Well, it's hard to say because sorry, interest rates were just too low everywhere. Okay, so if in the past it was Aussie yen or Kiwi yen, Australia just cut interest rates. They're at a very low level of 1.75 million in comparison to the past in Australia. New Zealand is perhaps also about to cut rates. And well, interest rates are low in Japan, but also they're extremely low in Europe and in the UK and in Switzerland. And they're, even despite the recent rate hike in the US, they're still low. So I don't have a specific carry trade that I'm looking at that I could say, okay, you lend money in cheap euros or cheap yen and buy this specific currency because the interest rate is relatively high and the risk is relatively low. So I would not say there's a clear carry trade until maybe a month or two ago. A few months ago, well, when the yen was still a bit more a funding currency, a sort of risk on trade would be something like pound yen or or Aussie yen or things like that, or even a few months beforehand, before the recent ECB action, carry trade could involve the euro as well instead of the yen as a funding currency. So I don't know. Pound yen, pound Aussie, which we mentioned before, going short on that could have been a good carry trade, but at the moment, it's just the US dollar against the rest. I can't see a good carry trade or going against the carry trade at the moment. Okay, so sorry, no clear answer on that. Anyway, that's how things are. Any more questions? Let's take another look at the charts. We're seeing another strengthening of the US dollar right now, against the euro at least. Nothing huge. Quite well, a bigger move against the pound in favor of the US dollar. Support 143.50 is getting closer. But on dollar yen, perhaps it is working just a bit as a safe haven, or just retreating from resistance. 107.65. Dollar yen is a bit lower than it was just a few minutes ago. But the greenback is strengthening against other currencies. Yeah, against the Kiwi, against the Aussie, against the Canadian dollar. Okay. So if you take pound yen in the last few minutes, you can see a relatively stronger move. Okay, but I wouldn't call that a classic carry trade. All right. Another question I see here. On the daily, weekly, monthly chart, the pound Aussie just hit its fib retracement, hence why I want to go short. Okay, if you can share the chart with us, that would be nice. I mean, share it on the chat. I'll share it with everybody on the video. Yeah, it's always risky. It's a pair that involves quite a few pips. I would say, yeah, so confluence of figures, a convergence is always welcome if you're focusing only on the technical side. On the fundamental side, I'm quite neutral on the pair. Okay. Yeah, it's certainly risky, that's for sure. Okay, let's move on to the wrap up for today. This is the wrap up for the live market open for Monday. It's actually May 9th. Okay, so we had quite a few events over the weekend which shaped the mood. The US dollar remains the winner, remains the leading currency after the big turnaround Tuesday last week, and the non-farm payrolls was good enough to keep the US dollar on the move. Chinese trade data does not look good. Okay, the bottom line was positive, a higher surplus than expected, but a big fall in imports and a smaller fall in exports and do not bode well for the global economy. Greece is back in the headlines. Parliament had an all-night session and they approved new controversial measures, new pension cuts, not real reforms, just to show the creditors that they're doing their share, hurting their citizens. On the way, today we have Eurogroup meetings, and they might give us some more. Well, they're expected to kick the can down the road, in my opinion, but perhaps approve the next tranche of aid for Greece. Anyway, this becomes more and more problematic. The Eurozone issues, the debt crisis in Greece, the political crisis in Spain, where I am, everything is related also to the Brexit. The European leaders want to keep kicking the cans down the road, at least until after the Brexit referendum. And oil prices, we have rising oil prices because of fires in Canada. 1 million barrels per day of production are missing from the markets. So we are seeing stronger oil prices, but not a stronger Canadian dollar, because the trouble in oil comes from Canada. And something to watch an eye out for is that Saudi Arabia shuffles its oil ministry, central bank, and there is suspicion that they can remove their peg from the US dollar. That could become interesting. Just a side story at the moment, but worth noting. Moving to the non-farm payrolls on Friday, just to recap, 160,000 jobs gained, below expectations, but markets eventually decided to focus on the good rise in wages, 2.5% year over year. Canadian jobs report was a small miss, and we already talked about the the Chinese trade data. In markets, we're seeing a stronger dollar. In general, nothing huge on euro dollar, just a bit under the 114 level. 114.60 to 113.35 these are the levels I'm watching. Pound dollar is making a bigger move to the downside in comparison to the euro. Speech by David Cameron on why Britain should stay in the European Union is the focus of the day in UK political news. He's going to be talking about the importance of the European Union for peace. Dollar yen showing very nice technical behavior reaching resistance 107.65. On the downside, we have 106.10. On the top side, 109. Dollar CAD making a move perhaps above 109.30, which used to be a good level. Now it's a bit more messy. Anyway, 130 is the very strong resistance line on top. 128.30 is on the bottom. Aussie dollar, 73.47 at the moment, feeling the pressure from the Chinese data and from what the RBA did last week. Support at 72.80 and 72.20, resistance at 74.40. So, and Kiwi dollar, New Zealand, also their rate hike is expected just to mimic the RBA, to follow the RBA. 68.20 is still level I'm watching. Below that, we have only 67. And on the top side, 68.80, 69.50, and the very nice double top of 70.50. The calendar is relatively light today in terms of indicators. Just the, Centix figure from Europe at 8:30 GMT, housing figures from Canada. Chinese CPI could be interesting at night for the Aussie. More important for markets is what's going on around the Eurogroup meetings for Greece. The speech by David Cameron and how it's analyzed by the markets. If it raises the chances, if it works for Cameron, that it's considered by political analysts as positive, as making a good case for keeping the UK in, or if he messes things up, and it's also possible, of course. And then we have sort of a backfire of his speech. So I would say that could have an impact on the pound. And let's see if the strong dollar trend continues. Again, I don't expect a rate hike in June, but the US dollar is still probably the cleanest shirt in a very dirty pile of the stagnating global economy. Okay, so that's it for today. Thank you everybody for coming and for the great questions. Wish everybody a safe and successful day in markets. And as always, we'll be here tomorrow at 7 GMT for catching up on what happens today and talking about what happens tomorrow, answering questions on technical charts, and you name it. Okay, so that's it. Thank you and bye-bye.